While everyone is chasing the next NVIDIA, one company just quietly signed a $9.7 billion deal with Microsoft to power the AI revolution, using nothing but cheap renewable energy. Today I'm breaking down how IREN went from a small Bitcoin miner to a power-first AI infrastructure platform, and why this could be one of the most asymmetric opportunities in the market right now. Let's start from the very beginning. It all started back in 2018 with two Australian brothers, Daniel and Will Roberts. Daniel had deep experience in infrastructure funds, managing billions in assets like wind farms and ports. Will came from commodities trading and even helped start a digital assets team. They had been watching Bitcoin since 2013, but what really clicked for them was the energy angle. They noticed huge amounts of low-cost renewable power going unused, stranded energy that nobody was monetizing at scale. So in November 2018, they founded Iris Energy in Sydney, Australia. Their big idea was simple but powerful. Build institutional-grade data centers right next to cheap 100% renewable power sources. Start with Bitcoin mining, but design everything flexible for whatever high-power compute came next. No corporate debt, full ownership of their own infrastructure, a true long-term infrastructure mindset. That was their edge from day one. Bold vision from two guys who truly understood both finance and power. By 2019, they were already mining Bitcoin. Their first major move came in early 2020 when they acquired their flagship site in Canal Flats, British Columbia, a hydro-powered location that became their prototype. They designed and built everything in-house: the data centers, ventilation, and power systems, creating a repeatable blueprint. Soon, they added sites in Prince George and Mackenzie, all running on abundant, clean hydroelectricity. At this stage, they were still private, laser-focused on sustainable Bitcoin mining. They sold every single Bitcoin they mined, carried zero debt, and used clean energy as their main differentiator. It was a smart, disciplined start that proved the entire model worked. In November 2021, Iris Energy went public on NASDAQ under the ticker IREN. The IPO raised roughly $232 million at a $1.5 billion valuation. That capital fueled massive growth. They kept their Canadian hydro assets but went aggressive in the United States, especially Childress, Texas, a site designed for up to 750 megawatts. Texas offered deregulated energy markets and the ability to scale fast and cheap. Other sites followed, including Sweetwater, which they positioned for future flexibility. This is when IREN stopped being just a miner and started becoming a serious owner-operator of power-dense infrastructure. The company was scaling at full speed. Starting in 2023, IREN began testing AI cloud computing services with NVIDIA GPUs. They saw the enormous power demand coming for artificial intelligence and realized their renewable-powered sites were perfectly positioned. And in November 2024, they officially rebranded from Iris Energy to IREN Limited. Then in November 2025 came the game changer, a $9.7 billion, 5-year AI cloud contract with Microsoft. This deal gives Microsoft fast access to thousands of high-performance NVIDIA GB300 GPUs in ready-to-deploy liquid-cooled data centers. For IREN, it delivers approximately $1.94 billion in expected annualized revenue, project-level EBITDA margins around 85%, and a 20% prepayment that helps fund the GPUs and de-risk the project. They're deploying these GPUs in phases throughout 2026 at the Childress campus, part of a bigger plan to reach 140,000 GPUs by the end of 2026 and target roughly $3.4 billion in total annualized AI cloud revenue. This is massive validation of their power-first strategy. What really sets IREN apart is their power-first model. They secure long-term renewable electricity at just 3 to 4 cents per kilowatt hour, 40 to 60% cheaper than most competitors. Their sites are grid-connected for maximum reliability, and they can dynamically switch between Bitcoin mining and AI workloads. For IREN, this was a game-changer. Revenue grew from just $59 million 5 years ago to $688 million in 2025, with Q1 2026 alone hitting $240 million, up 355% year over year. Of course, it's not without risks. The Microsoft contract creates significant customer concentration, and the project involves around $5.8 billion in GPU capital expenditure. Execution and scaling will be key. But if management delivers, IREN is transitioning from a crypto-cyclical company into a high-margin digital infrastructure platform with exposure to two of the biggest growth trends of the decade, Bitcoin and AI, both anchored by cheap renewable power that's increasingly hard to replicate. If you enjoyed this deep dive into IREN's story, smash that like button, subscribe, and turn on notifications so you never miss next fundamentals breakdowns. This video is for educational purposes only and is not financial advice. Always do your own research. Thanks for watching. I'll see you in the next one.